Have you ever wondered how the world's wealthiest investors make their money grow? Not just by buying stocks, but by literally buying entire companies. Imagine this. You buy a struggling neighborhood pizza shop for $100,000. You fix the recipes, improve the service, and rebrand the place. A few years later, you sell that same shop for $500,000. That's the essence of private equity. But here's the twist. Instead of pizza shops, think massive companies worth millions or even billions. And today, I'm going to break down private equity in a way that anyone can understand. By the end, you'll know what it is, how it works, why it matters, and how people actually land jobs in this insanely competitive field. So let's start at the very beginning. What exactly is private equity? At its simplest, private equity is about investing directly in private companies, businesses that are not listed on the stock market. The key difference is this. Public companies are on the stock exchange, where anyone can buy shares with a click on Robinhood or Fidelity. Private companies, on the other hand, are owned behind closed doors. You can't just buy in. Private equity firms gather money from big investors called limited partners. These partners are usually pension funds, college endowments, insurance companies, or ultra-wealthy individuals. The firm managing all that money is called the general partner. Together, they pool the cash into what's called a fund. That fund has one mission: buy companies, grow them, and eventually sell them for a profit. Let's say a fund raises $1 billion. They might buy 10 different companies, hold them for about 5 to 7 years, and then sell. If those companies double in value, everybody wins. Now, private equity firms don't all play the same game. They use different strategies. The first, and probably the most famous, is the leveraged buyout, or LBO. In an LBO, the firm buys a company using some of their own cash plus a huge amount of borrowed money. Then they roll up their sleeves, cut costs, improve operations, and grow revenue. When they sell, the debt gets paid off and the profits go to investors. It's kind of like buying a house with a mortgage, renovating it, and selling it for way more than you paid. Another strategy is called growth equity. This is where firms invest in companies that are already doing well but need extra cash to expand. Think of a booming tech company that wants to go global. Private equity provides the fuel. Then there's distressed investing, or turnaround deals. Here, firms buy companies in deep trouble, often on the verge of bankruptcy, and try to save them. If they succeed, the payoff can be huge. And finally, some firms specialize by sector. They might focus only on healthcare, only on energy, or only on technology. It's kind of like house flipping styles. Some people buy a total fixer-upper, some just add an extension, and others only buy in trendy neighborhoods because they know value will skyrocket. But why should you care about private equity? Because it's everywhere, even if you don't realize it. Private equity firms own supermarkets, gym chains, medical groups, even media companies. The impact is massive. In fact, globally, private equity manages trillions of dollars. Sometimes, PE can bring new life to struggling companies, creating jobs and innovation. Other times, it can be controversial, with job cuts or higher prices. But whether you love it or hate it, the reality is, private equity has a hand in shaping the economy you live in. Now, let's talk about the money, because at the end of the day, that's what private equity is about. How do these firms actually make money? The first way is management fees, often around 2% annually. If a firm manages $1 billion, that's $20 million every single year just to keep the lights on. The second way is called carried interest, or carry for short. This is where firms keep around 20% of the profits from successful deals. So if they double that $1 billion fund into $2 billion, that's $1 billion in profit. The firm pockets about $200 million. Imagine being paid both a salary and a bonus, where your bonus is a slice of $1 billion pie. So now you're probably wondering, who actually works in private equity? And how do you get a job there? Careers in private equity are highly sought after. People often see it as the end goal of a finance career. The typical path looks like this: start in investment banking or at a top consulting firm. These jobs teach you how to analyze businesses, build models, and execute deals. After 2 or 3 years of intense work, you might get recruited into a private equity associate role. Once inside, your job could be deal sourcing, finding companies to buy, or financial modeling, running the numbers to see if a deal makes sense. Others focus on portfolio management, which means helping the companies they've already bought run more efficiently. Now, let's be real, getting into private equity is not easy. It's insanely competitive. But it's not impossible if you know the steps. Step 1 is building a strong foundation. You need to master accounting, finance, and especially Excel modeling. If you can't value a company, you're out before you even start. Step 2 is getting into investment banking or consulting. These roles are like training camps that PE firms recruit from. Step 3 is networking. And when I say networking, I don't mean spamming people on LinkedIn. I mean building genuine relationships, talking to alumni, mentors, and peers who can vouch for you. Step 4 is proving your value. Private equity isn't just about crunching numbers. It's about thinking like an owner. How do you improve this business? How do you grow it? How do you sell it? And step 5 is patience. This is not an overnight journey. Many professionals take years before breaking in. Let me give you a fun fact. The biggest private equity firms, names like Blackstone, KKR, and Carlyle, have become giants that control everything from real estate to tech startups. In fact, Blackstone alone manages more money than the GDP of some countries. That's the scale we're talking about. So let's bring it all together. Private equity might sound intimidating, but at its core, it's simple. Buy companies, improve them, and sell them for more. The difference is the scale. Instead of flipping one pizza shop, they're flipping billion-dollar businesses. For anyone curious about finance, private equity is one of the most exciting and rewarding paths out there. If you stick around on this channel, I'll dive deeper into what skills you need, what daily life looks like in private equity, and specific strategies to help you stand out if you're aiming for this career. Thanks for watching. And if you found this breakdown helpful, do me a favor. Hit like, hit subscribe, and drop a comment about which part of private equity you'd like me to cover next. Your support helps more people discover this content, and it lets me know what's most valuable to you. Because at the end of the day, whether you ever work in private equity or not, understanding how it works gives you insight into how the economy runs and how wealth is really built behind the scenes.